From ports to power lines and the trade corridors are linking them, we zero in on the continent's infrastructure revolution. We ask, what will it take to build the backbone of regional and global growth? Hello, I'm Tabitha Muthoni and welcome to another edition of Focus On. Today, we focus on the second Djibouti Forum 2025.
First of all, we're delighted that we have such a crowd coming to Djibouti. We have around 150 international guests. And all in all, yesterday at the opening by His Excellency, the Prime Minister of Djibouti, we had just over 450 people in the room. So, you know, that's great positive energy around. The first time is always the hardest in anything you do. And we've done it last year. So I think we did overcome that first time. This time it feels that experience helps. Hasn't been easy. I mean, nothing is easy. It's a new forum. It's this size is also. It's the biggest ever in terms of an investment type of forum of this caliber of people, number of institutions. 150 people, international guests. That's dozens and dozens of institutions. A lot of money under management that's around here. About $2.5 trillion. That's a lot of money for Africa to come to Africa and look at opportunities in Africa.
Then definitely Djibouti is a strategic position. So what sort of investments are we seeing in terms of the critical infrastructure sectors such as ports and logistics?
Okay, so I'll start by saying please bear with us in terms of a relatively young institution and developing country. You need to build things over the long term, and therefore things don't happen overnight. So you can't bring a magic wand, and I know the expectations are so high at all levels that so this is the second edition. So when are the billions going to start flowing? Well, the billions are not going to start flowing immediately, because just like in any type of relationship, a human relationship, you start the dating first, right? And then you do the engagement, and then you do the marriage. So before you get to marriage and signing and binding MOU or binding a contract to do investments, first of all you get to know each other. Then you move to the MOU type of phase, which is the engagement in the business world, and then you press the button and sign the binding one, which is the investments. Now that is how long does it take? To a year, 2, 3? It does not matter. The question is when rather than if, and it requires obviously networking, following up, and we can't do it all. This is why it's teamwork. So our role here is to bring all these people in one melting pot here, being Djibouti from all over the world.
And as much as we are talking about when is very important, but let us look at ripe sectors that are, ready for marriage, which are, the immediate investment sectors that people can explore in Djibouti. When you get to Djibouti, you look at the ports, you have the logistics, but maybe other key sectors. What sectors are we seeing? For me, I'm looking at it from an energy, digital economy perspective, sectors that are ready for investment?
Look, first of all, I think small is beautiful, and then size matters. So it's a mix of both. In terms of size matters and scalability, it's the ports and logistics that can take a lot of money, and there's still a lot of money to go in there. So we're not done yet. This is the beginning of the journey for us. We have to look 10, 20 years down the line. And that's great. There's great interest in there from a lot of people, including other sovereign wealth funds. So that's the partnership also, and the PPP type of story that we are also seeing come out of this forum. First day was yesterday, and today hopefully we'll have another great day. So that's one, but the rest, yes. Digital economy, data centers is a big theme for all of Africa. We have 10 subsea cables. Do you know that? We needed to tell the whole world this is one of the most amazing places for subsea cables. So you can build something like Marseille in south of France, or like Singapore in terms of a digital hub. Tourism, it's an amazing, beautiful country. So we think there's a lot more to do in terms of great resorts here and on the islands. This is one of the newest hotels, and we can show that we can host an event for several hundred people. So events, tourism events could be done here, but we need more. We need about a dozen new hotels to attract about 500,000 tourists in the next decade or so. That's the target for Vision 2035. Energy, we can't live without energy. Today we need it, but we need green energy. And we've embarked on the journey. The target is by 2030 or so, will be 100% renewable. But we're looking to invest especially in geothermal, because we've done the wind power, we're doing the solar, but but we know that we have geothermal, and we should get inspired by the success of Kenya. Kenya has done great with Kenyan geothermal, but we know we have it, but it needs investments in terms of exploration and all of that. And financial services is another area that I think banks are looking into coming in here. I'm not saying Citibank will come, but the chairman of the MENA region is here, Middle East and Africa, and we know other banks. There's an Egyptian bank coming in. And why financial services hub here is because we have a comparative advantage being the currency. We have a pegged currency to the dollar, just like the GCC, and therefore there's no FX risk. Stability is the buzzword, and we have no FX controls. Where do we find that, frankly, in the developing world? You find it in Djibouti.
How is the FSD positioning itself to drive strategic investments that align with the country's long-term development priorities, particularly in infrastructure and innovation?
Thanks, that's a great question. So the Sovereign Wealth Fund was created in March 2020 with a dual mandate. The first mandate was to drive economic growth, inclusive economic growth, to create as many jobs as we can, but at the same time build a sustainable portfolio of assets that would build intergenerational wealth, basically dividends for the future generation. And that strategy and mission is the primary tool to implement what we call Vision 2035, which basically give us an idea of what Djibouti wants to be by then. And that includes being a more diversified economy than it is today. The last 20 years also, Djibouti has been relying on its ports and strategic location, and intends to do so going forward, and sort of like consolidate that advantage. But at the same time, Djibouti recognizes that it needs to diversify away from one main sector. And so the Sovereign Wealth Fund, it was structured to do that, to basically reinvest some of the fruits and benefits from the ports and other sectors like telecommunication into other type of infrastructure that will balance the economy. To give you an example, we are working to make Djibouti one of the main digital hub in Africa, building on its connectivity through its subsea cable. Djibouti has 10 subsea cables, which makes it a very well-connected point in Africa. And the ambition is to use that infrastructure, that foundation, to build layers on top of that of digital services that we can sell to Djiboutian, but also to the entire region.
You do mention quite a number of strategic pointers as they are looking at where Djibouti is at currently, looking at unlocking opportunities for regional and global growth at the same time. But I am keen on understanding, with all this, strategic positioning in place, I am keen on understanding how you're positioning yourself to, attract core investment, looking at the local partners, international partners at the same time. The goal is to, maintain national ownership and attract more revenue into the country.
To act as a local partner to international partners and private sector partner, whether it's local private sector or international private sector. But what's sure is that we need the private sector to drive the next phase of economic development. The public sector will not get there, get us to the vision we have without the private sector. And so what we want to be, and we have started to be over the last 3.5 years, is really that public, the P of public in the PPP model, private partnership, private public. We are the P in this 3P icon, and we want to be the trusted local partners. We understand the landscape. We have the support of the local community. Our board is also representative of that local support, and so whenever we partner with the private sector, we bring that local expertise, local connection, and also local understandings of what works and what doesn't work in Djibouti. And so far, we've been quite successful. In 3.5 years, we've attracted about 7 international partners, very well funded in key priority sectors. And all of them have a track record of doing business in Africa successfully. And so this way, we can leverage their experience to fast track the development of key projects within Djibouti without taking a bet on someone that is starting.
Balancing risk is very important here. We have all these investments in place. We have a strategic positioning all at the same time. But let us look at, higher risk, higher returns kind of, balance here.
Yes, I think your question is giving me an opportunity to really put forward the key benefits of investing in Djibouti. Basically, your question is, why invest in Djibouti instead of investing in other countries in Africa? And I think I've been blown away by the opportunity here and the great feature of the investment landscape in Djibouti. And I would cite just 3 of them that really setting aside and setting apart Djibouti. Number one, the political stability. I think Djibouti has showcased the longest stretch of political stability in the region and in Africa. And that's really important. If you don't have political stability, it's very difficult to project yourself as an investor for the long term. That's number one. Number two, currency stability. As you may know or may not know, Djibouti has the Djiboutian franc, which is pegged to the US dollar, and that peg has been in existence since 1949, so 75 years, which is great because basically it means that if you're a foreign investor coming to Djibouti with dollars, through that peg with the US dollar, you basically investing in your own money. And so you don't take that risk that many other investors took with other countries and suffered massive currency devaluation. So back to your question on return on investment, your return on investment when you come to Djibouti is a US dollar based return on investment. And then you have all the other features that you find in a young economy, very young population, very well skilled, a GDP growth above 5%, low inflation, but also from Djibouti, you basically enter a 600 million plus people market in East Africa. You have Ethiopia next door, and then the entire sub-region is a very big market with the same feature, young population growing, and so on. So all of that, I think, is really building a strong case for attracting investors in Djibouti. Not the least, you also have 13 commercial banks in Djibouti, 13 commercial banks, so 1-3, which also gives plenty of opportunity to find, debt financing in the region.
Unlocking infrastructure means unlocking everything else. For this Focus on Djibouti Forum 2025, I have been your host, Tabitha Muthoni.